Hi, I'm Catherine Gray, founder of She Angel Investors and co-founder of the She Angels Foundation. I'm also the podcast host of Invest in Her and an award-winning producer, author, and TEDx speaker. Our show, Invest in Her, features phenomenal female founders and funders. As you know, women receive less than 2% of venture capital funding. Our series is about accelerating the funding of women by connecting them to funding resources. Let's meet today's guest. Welcome to this week's edition of Invest in Her. I'm your host, Catherine Gray, founder of She Angel Investors and co-founder of the She Angels Foundation. Also recently producer of Show Her the Money, the award-winning film about the underfunding of women in entrepreneurship in the venture capital world and how we're going to change that. And I have a great guest on today to talk about that. And she has her own company, which is called Next Gen Success. And she is with LOHAS, a partner with LOHAS, and they help people set up DAFs. And what she does is drive organizations and producers to raise alternative capital. And we're going to talk about what that means. Welcome to the show, the amazing Tami Kesselman. Hi, Tami. How are you?
Hello, I'm great. How are you, Catherine?
Great. I know it was not easy getting here to the set today. We won't even talk about you got pulled over for a ticket. I'm not even going to mention that.
I had such a spotless track record because of divine luck. So I don't know, something happened today, but we're here.
We're here and we are ready to rock and roll this topic. And I'm so happy we met at the Purpose and Profit panel at the SIE conference here in Los Angeles. And that really is when you came on my radar and I'm like, oh my God, I have to have this woman on my show so we can talk about all the cool stuff she's doing with alternative wealth. So let's talk about what you do about raising alternative capital and for what purposes and what that even means. Let's start with that.
Right. So, alternative capital. So even what is that, right? So traditional capital, you go and you ask investors who do anything from seed round, like friends and family, to angel investors before you really have any proof of concept or you're just barely there but no revenue, to all the way through to regular VC and private equity. But you think of people who write checks for a living to invest to get returns. Alternative capital can be many different things. But what we're talking about today, what I talk about and what LOHAS does is we help people go back to those investors, those fans of theirs, and say, if you have a donor advised fund, and a lot of people are like, what is that? I don't know what that is. I don't have one. But for the most part, people actually do, even though they don't realize it. Investors, the markets have been really good, regardless of what politicians say, for the last bunch of years. And so people have capital gains, right? So they've made money in the market, which means that when they go to their tax accountant at the end of the year to do their taxes, their tax accountant is going to tell them, for tax reasons, you need to really put some money in charity. It's going to help you out tax-wise. So they're like, okay, tell me where to put it. And they end up putting it at Fidelity Charitable or Silicon Valley Community Foundation or wherever it is, right? They just set it aside and they'll figure out where they're sending it later and they get that tax advantage. Well, any of those are a donor advised fund. And so you can actually take that money. Fidelity Charitable doesn't tell you this and doesn't let you. They make you only give it to what you would think of as philanthropy, to the Red Cross, to whomever, to cancer, to some local charity in your neighborhood. But IRS-wise, you can take that donor advised fund money and you can invest it in anything, well, even it's not mission-driven, but definitely anything mission-driven. So any for-profit, including many of the people listening today and watching today, you can go back to your investors and tell them if they have money just sitting there, they can actually invest it in equity in your company. And so investors who think, I love what you're doing, but you don't have a track record yet, I really need to wait. You can go back to them if they genuinely like what you're doing and say, if you believe in us, help us get our track record, take that money that you already wrote off. You already got your tax upside to it that's just sitting there doing nothing except making money for Fidelity, and put that in. And then you can take that money and guess what? 5 years from now, we get a 5X exit. You actually get that money back in your donor advised fund. So it doesn't go back in your pocket. It goes back in your donor advised fund because you already got your tax advantage. But then you can keep on reinvesting it. So it's actually much better than the traditional way to do charity if you have a company that they believe in as a positive mission.
Now, let me ask you this, because LOHAS helps people set up their donor advisory funds, or DAFs, as most people refer to them. And most people don't know what those are. So that's why I wanted to have you on and even talk about that. But um, how and why would they set that up? And not all DAFs are created equal, right? Like some of them you can use for putting into equity for profit, companies, and some you can't, right? And what differentiates that? And how do you set up the one that allows you to put it in anything?
Exactly. So what differentiates it is where you set up your DAF. That's the one thing that differentiates it. So if I set mine up, again, at somewhere like Fidelity Charitable, if you set it up at your bank, you just have to ask your bank. If their policy, a lot of times they'll only let you do it in a GuideStar 501c3 charity, partly because then they don't have to do any diligence to make sure you're not like laundering it back into your own pocket, right? Because it's already something that's pre-set aside, or it's because the more they make it hard for you to allocate it out, the more you just leave it there and they charge fees on it and make money, and they're investing from their account on it. And so they don't want you to allocate it to do good, even though the whole point of the IRS giving you the tax break is to allocate it to do good. And then there's some donor advised fund like sponsor. So picture the bank as your sponsor. They're like your, for your regular account, let's say you go to Goldman Sachs, you have cash in the account or you invest in your account. So on the donor advised fund side, same thing, whether it's Goldman, Fidelity, and then there's some other donor advised fund sponsors, some big, some small, that will let you do it just to their predetermined list of companies because they have partnerships with companies. So they want you to allocate capital there, but not to things you want, only the things they want that are for-profit equity. And then there's a few places like LOHAS that actually let you direct where you want it to go.
I love that. So this is for who? Like a successful business person, maybe someone who's inherited money, family offices. They would say, come to someone like LOHAS or similar and set up their donor advisory fund so that it saves them taxes while also giving them a fund that they can invest in just about anything. And then those profits will go back into that fund that's doing greater good. So they get the tax write-off and they get to make an impact in the world. And not just in charities, which, I always say women are so great about giving to charities, which is a wonderful thing. But this is another vehicle to actually help women entrepreneurs by investing in them, which makes a great investment. They tend to have better results, more successful earlier. And why wouldn't you want to make an impact with that money in for-profit that also is making an impact in the world? And then maybe even getting a return to help build that fund that you're utilizing to help make impact and leave your legacy, right?
Exactly. Well, and we already know, and you have the stats way more than I do, but we already know that women get 2% of Silicon Valley funding, of venture capital funding. So even though they perform better, even though we perform better, we get less access to capital. So this is a way for women to empower other women who are getting left out, who have great ideas, who are going to do really well, but people invest in who they know, and men with wealth invest in other men. It's not even, we could go into some other time, some like unconscious bias and things. Yeah. I love intentional. But this way, women and men can take their philanthropic capital. If they still have that bias of like, yeah, but I don't know, I've never invested in a first-time female founder before. Great. Have your bias. Look at it as charity. And guess what? Let it surprise you when they perform as well as anything else in your portfolio. And I get with that. Like, let's be that transition. So instead of putting your money in, I don't know, I could give a lot of list of charities that that spend the money on whatever, on housing, things, and next year later they fixed nothing, right? That problem's just as big. And a lot of these for-profits are trying to empower people to actually shrink those problems.
Right. And like maybe an example is maybe you donate to a 5K run that helps to cure cancer, but at the same time, you could be investing in a woman that possibly has the cure for cancer. This is just like an example. But
absolutely,
investing for profit in things that actually are making a difference and fit your and align with your mission is such a great eye opener. That's what we're trying to do with this show, and the things that you're doing with LOHAS is to get people to start thinking differently about their nonprofit dollars that they're getting their tax deductions on. How are they using that tax deductible money? And opening their eyes to all the possibilities of what they can be using it for. And I think that's a cool conversation to be.
Absolutely. And I want to add that if you have your donor advised fund somewhere else, you can move it over. Like LOHAS, and to the extent that you find others that will do this, you can move it over for free. We don't charge to set it up or to move it from somewhere else. So you have to check with wherever it's at if they charge you to exit, right, to move it out. But we don't charge a setup fee. So even if you don't want to start a new fund, you already have a donor advised fund, but it's not allowing you to invest in women founders that are for-profit founders to enable them to grow and to enable them to solve things, because women often have a different lens on how to solve things, even in their for-profit businesses, right? So, so you can move your donor advised fund over and then take that money and invest it in women entrepreneurs.
Yeah. And I did have someone who invested in our movie show her the money that did exactly that. They had a donor advised fund that didn't allow it. They moved it over to one that did allow it and invested in the movie because they cared about the topic. So yeah, that's really cool. I know you, like many successful women, don't just do one thing. So you also are CEO and founder of Next Gen Success. Let's talk about that. And also you have an interesting background, Harvard, working also with Tony Robbins as a elite coach with him. I think that all ties into your Next Gen Success, right? So let's talk about that. I know you're passionate about it.
Absolutely. Well, to me, coming from the Bain and business strategy side and the Tony Robbins and individual excellence side, I started looking at where there's gaps. And I've been in around outsized money and outsized unhappiness since high school. And when I graduated from Harvard, I went to Bain, again, was strategy consultant. But at the same time, I started to see where there were gaps between successful people who weren't happy or people who felt like they could either make money or have impact. And so over time, I, on one side, evolved to helping people look at aligning wealth creation and impact stewardship across asset classes, which is where we came to where we are now with LOHAS and how we evolved that. And then on the other side, I looked at people who are wealthy but not happy, of which, as we know, sadly, money doesn't buy happiness, right? Sometimes it brings more problems. Post-liquidity founders, you look at Kate Spade or Tony Hsieh, who got their dream exit and then spiraled to suicide. So I realized that I needed to bring some of that Tony Robbins side in. And so in the Next Gen Success side, I work with people, whether they're next gen inheritors who feel trapped by their family's last name and don't know if anyone's ever actually been their friend or a friend because of their dad's last name, and post-liquidity founders who get this windfall and then they can't trust anyone around them who wants a piece of it, or even CEOs who go from founders to growing their company into 6 figures and then 7, and between 7 and 8, suddenly there's this trade-off of they love their business and they're focused on it 24/7 and it's causing chaos in their personal life. So I work with them on aligning wealth creation, impact, inner happiness, and then crafting enduring legacy and whatever they're most passionate about to have that next true north compass after whatever they're working on now.
Yeah, I love that. So it says that you lecture on wealth, impact, happiness, and legacy. Are those the 4 most important things to you?
They are. It's about and when I lecture, one of the things, when I coach, I do coaching and I don't reference anything religious generally, but in a very Judeo-Christian way. Something from the Bible that always hit me was the Psalm 3:18, which is, "It's a tree of life to those who hold fast to it, and all who retaineth it find happiness." And I find that a lot of life coaching gurus who would do these events with thousands of people, they talk about you rate your life in silos, right? How are you doing in your mental health? How are you doing physically? How are you doing spiritually? How are you doing in your financials? How are you doing in relationships? And there are these different boxes, but we're not individual boxes. All those things relate. And if everything's working except your financials and you're broke, you lost everything, you're in crisis. If everything's working, including your financials, but you just got a really bad health diagnosis, you're in crisis. So it's all an integrated whole. And so that tree, so when I work with people, we look at your tree has your roots that are your core values. And the more you live in those, the more you become that person, that higher value, that person that makes you happiest, that you want to see yourself as in the future, whether it's passion or joy or faith or whatever it is. And It's like DNA. Everybody's are different, right? And then you have your 3 core branches personally and 3 professional. And personally, you have self and friends and family. And self, they break down into sub branches, so mind, body, spirit. But you have self, friends, and family. And one thing to note is that family and self are 2 separate branches. You as a self is not a subset of your family, and you have to have them each healthy in different ways, right? To be happy. And then on the professional side, you have financial, career, and community or contribution. So some people that's giving back, legacy, impact, but contribution, which includes being an alum, an active alum, or being on the PTA, or being involved in a political something action campaign. And it involves that long-term legacy of wanting to change something in climate or in education or in reducing the amount of sexual assault victims, whatever it is, right? So you have very different things that are that kind of community aspect of contribution, and then that long-term legacy of where you want to put a dent in the universe. But before we end that, I just want to point out, really importantly, the most important part of that, and when I work with people, one of the biggest things they walk away with is the fact that financial and career were 2 separate branches. Yeah. And that's where people get lost. They conflate the 2. So for everyone listening, you could have, you're starting your company or you're an investor investing in companies. You have to ask yourself, are you doing that as your career or are you doing that as your financial? And depending which it is, you need something else for the other one. Because what happens is people who conflate the 2, if one is broken, you can't solve it without sabotaging the other. So what do I mean by that? Like you look at pro athletes, you look at Michael Jordan, who his career was basketball. And his financial was Air Jordans and Michael Jordan steakhouses and all these different things. So when he wanted to play basketball, he did, and he played for the love of it, which made him play happy and play better. And so he got bigger sponsorships. So in the beginning, he's making more money in basketball, but he took that money and invested it financially. And then at one point, he decided he really wondered what it would have been like to pursue baseball, which he had played in college also. So he quit, decided to be a baseball player. And then it was not as much fun. So he's like, well, that sucks, and he went back. Most athletes can't do that because they haven't set up that buffer. Right. And then when he was ready to retire, wouldn't have mattered if he got badly hurt 3 years before he retired, right? He had that financial buffer where you have other ones who go broke.
That makes perfect sense. I just had this conversation with an entrepreneur the other day and realized they weren't setting up their financial life. They were just working 24/7. And I was like, no, you need to come over here and start building your wealth over here. It's synonymous, but separate. And you have to look at both separately for sure. And I love that advice. That's great.
Well, and I just wanted to, and exactly on that, just to translate, so it's not just about pro athletes, right? And it's not just about your wealth versus your personal life. But so I went to the Kennedy School at Harvard, and I had friends who went to Harvard Business School. And one of my friends from the Kennedy School wanted to be a senator. So that's his career. And it's not going to happen for 5 or 10 years, but like his career is senator, and that's how he's showing up in what he's making choices. And then his financial was Wall Street, was being an investment banker and trading on Wall Street. And so this was going to make him a lot of money. This base salary was like $60,000 and multiple millions in bonus. And then I have friends from Harvard Business School, and we all know the type who that's their career. Like they can't wait to go be an investment banker and to go trade. Like that's what they love. And so they went and did that as a career. Well, what's important is then they needed something else for their financial. So their financial was day trading or investing in a family business or investing in health tech or ed tech or whatever the bubble, whatever they want to, right? So what happened in 2008? Not to totally date myself, but pretend I was 5 at the time. What happens in 2008? Right? Both of us. We were young ingenues. So in 2008, the market tanks. They lose all those upside millions. So my first friend, that's no longer going to serve him for his financial. He still wants his career is still senator. So he needs to quit that job, or he's going to get laid off anyway, and go find a different job, right? For his network and his treasury. But my friends from HBS who love that as their job, they had a financial buffer so they can stay there and gut it out. They don't care if they make no money. And then what happens? They're celebrating that everyone else is falling by the wayside. So when the market comes back, their career just surged.
Right.
So any job for different people might be their career or might be their financial. It's important to know what it is for you and to have the other thing. So when something goes south in one of those 2 branches, you can fix that without sabotaging the rest of your life. And that's where I see one of the biggest distinctions. And that goes back to that aligning in a more 30,000 foot view wealth, impact, happiness, and legacy. And so, but it really, when it breaks down tree-wise, you want to just make sure each of your branches is separate. And so you know if one's not working, how to fix that without sabotaging other branches.
I love that. That is super great advice. I'm going to close with that. I'm going to let people know that if they want coaching along these lines, you have Next Gen Success. You can find Tami Kesselman on LinkedIn. And also, should you want to set up a DAF, a donor advisory fund, or learn more about it, she's a partner at LOHAS. That's LOHAS for those just listening. And so, yeah, wealth of information, great energy human being, and just so happy our paths have crossed, and love having you on today. What a wonderful resource you are in so many capacities, which I love to bring to the table on Invest in Her podcast. What about social, other than LinkedIn?
I was going to say thank you, first of all. Like it's you, and you're such an inspiration, and the money that you're bringing, the awareness and the training that you're bringing to women entrepreneurs to give them that leg up to be equal is amazing. And your spirit, and as much as Catherine pulled me into this, after we met on that panel, I may have pulled her into a panel a week later on the business and finance side with a room full of like white men over 50. And that was perfect, because I think we're spreading the word everywhere, which is great. For me, social is really LinkedIn is probably the best way. And then I'm on Facebook and some other things, but I really pay attention to LinkedIn. Importantly, for your inner circle here in the know, my LinkedIn is private. So you need my email address to link to me, which is easy. It's just TK for Tami Kesselman at nextgensuccess.com. And so it'll prompt you for that. So just to follow me, join me, connect with me on LinkedIn. Well, I guess you can follow anyway, but TK at nextgensuccess.com. And I look forward to doing some more awesomeness in the world together, Catherine.
Absolutely, Tami. We're there. We're on a path. And everyone, thank you so much for tuning in. You know where to find me on LinkedIn, Catherine with a C, Gray with an A. And also, sheangelinvestors.com has a lot of information to help you. We have the Silicon Valley Women Founders Fund, and that's to fund women in tech. Gosh knows we need it. And then also, of course, you can find the movie, showherthemoneymovie.com, to see where we are screening, or if you would like to screen it yourself virtually or in person with your groups. So thank you so much, everybody. Tami, you're